Hey, good evening, everyone. We'll get started shortly here in about 5 minutes. Alrighty, hey, good evening, everyone. It is 6 o'clock right on the dot. So I figure we'll go ahead and get started. We'll probably have a few more people probably trickling in here. But I know I want to be cognizant of your time. And so first and foremost, thank you so much everyone for joining us today. It's our very first home buying webinar of 2025. And so we appreciate you taking time out of your busy schedule to join us. My name is Cal. I'm joined here today by Rachel Scarella, one of our um, trusted partners. Say hi, Rachel. Awesome. And so we've been working together for about 7, 8 years now. And so she's a fantastic resource. And so she's our main guest speaker. And so today I wanted to talk to you all about the home buying guide for 2025 and turning the challenges into opportunities. And so before we get started, a couple quick housekeeping items. Number one, the webinar is being recorded, so we can provide a copy for you if you'd like. Again, we're scheduled for about an hour and a half. So again, if we end early, we'll let you know. We'll open it up for questions at the end. We do have the Q&A chat function open. So if you have any questions, please go ahead and just enter those into the chat or the Q&A box, and either Rachel or myself will get to you. And then last but not least, all the attendees that are attending tonight will be entered into a $25 gift card drawing. And so I'll announce the winners tomorrow for that. But with that being said, let's go ahead and get right into it. And if there's any technical difficulties, please let me know. So, um, perfect. All right. So I wanted to start off. This is me before I got LASIK. I've been with Ideal Credit Union for 8 years now. Our mortgage loan officer team, we have 3 people here at Ideal Credit Union that originate loans. Very, very experienced team. We've got our own in-house processors as well with over 30 years of experience. And so super excited. Again, I'm the mortgage sales manager here. Big part of my job, educating. I love educating our members. I feel like knowledge is power. Applied knowledge is even better. I enjoy what I do. I love building relationships. I love making friends along the way. And I will say buying a house is probably going to be one of the biggest financial decisions that you will probably ever make. And so, and I want to be here for the long haul too. So again, that's the most rewarding part of my job. But again, we got 3 loan officers here, and any one of us is more than happy to help you. So, um, so before we jump into 2025's opportunities, I wanted to just touch base really quick on just 2024. This is my personal recap, kind of how I went. These are kind of the challenges that we had last year. Number one, which is probably you see this all the time all over the news, elevated interest rates, right? You see that they've gone up, you see they've come down. And I will say that interest rates will do what they want to do. And so I don't have a crystal ball. I can't tell you rates are going to go up or down, but they change daily. So my loan officers and I, we kind of make sure that we are monitoring it daily and making sure it's not really impacting our borrowers too much. That was probably the number one challenge in 2024. Number two was low housing inventory, which I will let Rachel touch base on. She's the expert of that. And she deals with it day in and day out. And I mean, she's only been doing it for about 17, 18 years. And so she's seen quite a bit. Number three was affordability, which kind of goes in line with the elevated interest rates. With the way the rates are going, obviously, if the rates are higher, you're going to be able to qualify for less house. But the other thing with affordability is I'm sure you've all seen when you buy a house, you got to have homeowners insurance, right? And with all the natural disasters that's kind of been happening, homeowners insurance premium has really gone up quite a bit. And so that's also impacting affordability because we have to estimate what that payment's going to look like with your insurance and the taxes and whatnot. And so and then last but not least, borrower education and preparedness. Surprising, but not yet surprising is, there's still a lot of misconceptions out there in terms of how much do you have to put down? What types of program do we offer? And so a lot of the members that I do meet, I mean, some of them are still thinking that they have to put 20% down and the conventional loan is the only way to go, which is not the case. There's tons of programs out there to help with down payment, tons of programs to kind of fight again, affordability as well. And so challenges of 2024, this is just, again, my personal input on it. And so I wanted to start off, I'm not an economics major, but I wanted to just quick show this to you. We're going to follow this blue line up here on the left side. If you can see but you can see here 2024 rates started at 6.62%, climbed up a little bit over 7 midway through the year, and then actually dropped down. And in October hit a low. I think at the lowest rate I saw was 5.875. And so we got a nice boom um, of borrowers that got pre-approved during that time. And so, but as you can see here, rates on the right-hand side here, rates actually have come right back up to just under 7%. And so that's kind of what we're sitting at today. Like I said, rates are going to probably do what they want to do unless something major happens again, like a pandemic, which we probably don't want. So, um, but how does that impact you? So as a borrower, you have to understand when rates go up, your monthly mortgage payments are going to go up. So which means that if you were pre-approved for a maximum of 300,000, we're just gonna say this. So if you were pre-approved for $300,000, that's kind of the maximum you're at already. If interest rates end up climbing while you're still finding a house, you probably won't be qualified for 300,000 anymore, unless you put more money down. So it does impact your purchasing power. And then of course, like I said, affordability, right? So, and then also the second thing is total cost over time. If you're paying a mortgage for 30 years, it's going to cost, you're going to pay a lot more towards interest over that 30 years. But just so you know, the average lifespan of a mortgage is probably about 7 to 10 years now before, our borrowers either refinance or they move, just because, again, life happens. And so opportunities in the market. So with the rates, right? I know we've talked a little bit about that. I like to focus on the long-term investment, meaning what's your plan, right? What do you want to do? I've had buyers where rates were at 3%, and the competition to buy a house was just they didn't want to deal with any of it, so they waited, and they bought last year at a higher interest rate. And then I've had a borrower who actually bought a house in 2020. They've just been making payments, normal, regular payments. But what's happened is the housing market has boomed so much. They've gained over $100,000 in equity in the last 5 years and really haven't done any updates. It's only because the housing market has gone up that much. And so really understanding that, again, if you focus on long-term investment, there's an old saying that says, date the rate, marry the house, right? I mean, it's an old saying. I'm not I'm not saying that's what you should do, but again, the average lifespan of a mortgage is only 7 to 10 years. So, if rates come down, you can capitalize on refinancing, even though there's cost to it. If it's saving you $200 to $300 a month on a payment, why not? You can roll that cost right into the loan and get a lower monthly payment. It makes it more affordable. Number two, opportunities, negotiate better deals. And I say this, and hopefully Rachel probably touched base on this too, but we're seeing a lot more of our buyers get sellers to contribute towards their closing costs. So when rates are elevated the way they are, you have a different pool of buyers, right? You have the buyers that are like, all right, I'll make it work, and I'll make the payments. As long as I'm comfortable with payments, I can move forward with this. But once rates come down, there's a lot of people that are waiting for rates to dip, right? They're like, I'm going to wait for the crash. I'm going to wait for the crash. And what ends up happening is when the rates come down a little bit, all of a sudden, instead of your competition of 1 or 2 bidders, now you're back to 20 bidders. And then we're back to, 2020, where we're having 10, 15 offers on a house, going over the asking price. And so as of right now, it's a good time. You can negotiate better deals, better terms. Number three, there's lots of different alternative financing. I have seen an uptick in adjustable rate mortgages, which is probably one of the most, when someone hears adjustable rate mortgage, they freeze. They're like, I don't want a rate that's going to go up and down every year. But there's this big bubble around this is don't ever get an ARM, which is just the acronym for adjustable rate mortgage. But what an adjustable rate mortgage allows you to do is lock in your rate for the 5, 7, or 10 years. So you have a lower payment initially to start off with. And then it can go up or down depending on the market. So again, it's locked for a period of time. So if it's locked for 10 years, it's 10 years from now, I don't know what's gonna what's gonna be happening, and I don't know what's gonna happen in the housing market. And so, just again, different alternative financings. Um, we've got a zero down program where you don't have to put any money down, but then what happens there is the payments are a little bit higher because instead of a 30-year mortgage, it's a 25-year mortgage. So you're building equity a lot faster, but you're not putting any money down. So, and then last but not least, I'm going to be transparent with you. There are so many different types of down payment assistance programs out there. You can probably just Google it, and I'd say like easily 10, 15 will pop up. But again, you don't have to be the experts. That's where me and the loan officers come in. That's kind of what we do every day. We talk with you. We figure out what makes the most sense. We figure out, what programs might best fit you. And so yeah, so I think these are great opportunities right now. And for me, I guess it's coming from me, so I'm like, it's always a good time to buy, right? I think it is, and it's just, is it on your timeline? Are you ready for it? So the one thing that we can control, that I feel like we have the most power of is our borrower education and preparedness. And so I say this because I feel like most people dream about owning their own home. They really don't dream about financing a house. And so I thought that was really funny. I saw that quote the other day. I'm like, yeah, you're right. No one really thinks about, oh, I got to get pre-approved to buy a house. It's like I'm excited about buying owning a home. And so I think the more that you educate yourself, the better off, I feel like you are more confident. And so number one thing is set up a mortgage planning appointment. I think this is so crucial. You can do this before you start looking at houses, or meeting with your realtor. I think those are kind of intertwined. I've had members look at houses with realtors before they got pre-approved, which is totally okay. But the realtor is probably going to ask you if you've been pre-approved already. So during our planning appointments, these are the six things that we really that we do to help you educate and learn more. So number one, we determine what's your timeline. Everyone's timeline is different. I have people that are already ready to buy a house. I have people that are going to buy in 6 months. I have people that won't want to buy until like 2 to 3 years, which is okay. Again, the appointment doesn't mean you've applied and then we've pulled the credit and everything. It's just let's just figure out a good timeline for you, and work towards it. We help determine what your goals are and what your financials are. Again, everyone is a little bit different. Some people want to buy investment properties. Some people want to buy a duplex, live in one side, rent the other side. I mean, it's totally up to you. And so, and part of that determining your goals, and I'll jump into these a little bit more in detail, but figuring out what's a good, comfortable payment for you versus what the maximum amount is. Number three, kind of one of the things that I love talking about, understanding your credit score, why that matters, what the minimum requirements are and how you should handle that and getting a better credit score and how that impacts your rate. Number four, what are the requirements? We talk about the different documents we're going to probably need, pay stubs, W-2s, but we've got a lot of that automated now. So it's actually a pretty seamless process. And number five, again, a lot of different types of mortgages and programs out there, and leave it up to your loan officer to, again, kind of chat with you and see what makes the most sense. Because a lot of these programs do have income limits, and I'll dive into a little bit more of the programs that we offer here. And number six, build trust, communication. I mean, you're not buying a toaster. You're buying a house that you're going to be living there. And it's going to be a 30-year mortgage. It's going to be a very big purchase. But I think building trust and communication, and being able to set you up for success, making you feel comfortable. So again, meeting with the loan officers, making sure that you build that trust, and the communication between you, the borrower, the lender, and then the realtor as well. So number one, why buy a home? So this is your timeline, right? So really having a place to call home, future generations to call home. So personally for me, I loved renting. I rented for probably, oh, bear with me here. I'm gonna admit a few of these people in. Perfect. So again, so for me, I loved renting. I rented for probably about 5 years, because I loved that I didn't have to do any maintenance. I loved that whenever something broke, I just called the landlord. But what changed for me was I had my first kid, and so I started thinking I got to get her, in about 4 to 5 years. She's going to be going to school, right? I can't just be renting forever. Um, and so that's what triggered me to buy my first home is because I started thinking about, okay, I can't just rent forever, even though I loved that. And then after a while, I started counting how much I had paid my landlord, how much mortgage I had helped him with, how much. And so I'm like, I could have put this into my own home. And so again, kind of figure out the why for yourself. Another few reasons that members have told me is they like to control what happens to the home. They like to control, if they wanted to move things around in the basement or remodel certain things, they could do it themselves. Um, Another one is being the first member of your family to own a home. I think that's really important. Um, if you're the first member to own your own home, then they'll probably be having Christmas and Thanksgiving quite often at your place. Um, uh, Number four, build equity for yourself. Again, I gave you that example. People who bought in 2020 homes have just appreciated, and so they've got over 100,000 in equity by just owning their own home and continuing to make the payments. And last but not least, having stable payments. So when I rented, my payments went up by $50 every year, $100 certain years. Um, but I think that's, having stable payments on your mortgage is also a big factor. And so right. Number two, we help you determine your goals and your financial situation. So again, everyone's timeline, everyone's why is different. So I have members who are looking to buy a primary residence. They might be a first-time home buyer. They might have owned a home before, and this is probably they haven't bought a house in 10, 15 years. Rules and regulations have changed. That's why I think it's important to rely on that loan officer and our team to really guide you through that. Some buyers are looking at vacation properties. They're trying to figure out how much do I have to put down. Some people are looking at investment properties. So again, totally assessing your situation. And I know financials can be kind of a sticky topic, if you will, but I think it's important to get that in order before you get excited and you find a really nice house and then you're like, now I got to go qualify for it, right? And so the types of homes are important too, just only because they have different costs associated with them. Single family homes are just homes that you own the house and lot around it. Condos are like condominiums, so you own the building, like a unit inside the building. Um, and then you pay an association due where they take care of everything on the outside. And then are you looking for a townhome? Townhomes, that means that the outside of it is really taken care of by the association itself. Or are you looking for like a multi-unit home? So duplexes, triplexes, or quads. If you wanted to live in one unit and rent out the rest so that they could pay your mortgage for you. So we're seeing more of those as well. And so um, figuring out what your long-term goal is. Is this your starter home? Is this your forever home? I think that's also important and um, helping you understand it as well. We had for me, we had a 5 to 10 year plan to stay in our house, and then before my kids went to high school, we would move again. But again, life happens, and so I've had two more kids since then, and um, so now we have to upsize eventually. And then of course, last but not least, I know this is so what's an affordable payment for you versus what's a maximum payment you would feel comfortable with. So I meet with buyers a lot and I tell them, I'm like, hey, looking at your financials, I could probably approve you for 500,000. But do you want a payment of $5,000 each month? Like, is that going to be okay? Like, just remember you've got other expenses. You've got the Excel, you got the gas bill, the water bill, trash, all the good stuff. Food, you still have to, buy a bunch of stuff too, but really trying to figure out what's a comfortable range for you. And so I think that's, one of the main things we like to look at too, to ensure, again, you're comfortable with that because it's not our payment. It's unfortunately it's yours. And so, um, third thing that we like to look at credit, so credit score is pretty much the ability to borrow money with the promise that you're going to pay it in the future. That's all. They try to make it as universal as possible. There's 3 different credit bureaus, and they pretty much range your scores between 300 all the way up to 850. And minimum credit score for a mortgage is 620. That's usually the minimum that they would require. Why is credit important? It establishes your trustworthiness as a borrower. It's going to help you build your financial reputation. So the higher your credit score is, you have a little bit more leverage in terms of like a better interest rate or lower mortgage insurance premiums. Because the higher your score is, that shows the lender that, hey, you're a very low risk, um, no issues there, and that you've been paid in your bills on time with no issues. And then, of course, the last one says shows your lender you can handle paying back creditors. And so credit does matter. I'll give you guys a couple tips on how to build credit if you don't have any, and also how the pie chart is for credit. So 5 factors that really impact your credit score. The number one thing is payment history. That's 35% of your score. Um, I'm sure you've probably all studied it a little bit, Googled it, educated yourself, which is a really good thing. Payment history is 35%. So one thing to note about this, most creditors don't report a late payment unless you're more than 30 days late. So you could, if you're like 10 to 15 days late, they might still charge you a fee for it, but they won't report it to the bureau, which is good, which is what you don't want. So 30% of your score is the amount that is owed. Usually you want to try to keep your credit card balances 30% or lower, than what 30% or lower of what your limit is. So if you have a $1,000 limit on a credit card, you want to try to keep that balance $300 or less, um, when the statement cycles over. And so those are the two big ones. And then the other three factors are length of credit history. So normally to have a good credit history, they want at least 2 to 3 years minimum. That's how long it takes them to establish a good history. And then the other two, so 10% is new credit. They also like to see how often are you applying for new credit cards, and how frequently are you having those hard inquiries. And then I'm sorry, the other one is kind of light. So 10% is a credit mix down here on the bottom right. And that's just saying what types of credit do you have? Credit cards are probably the fastest way to build credit score, but do you have a car loan? Do you have a student loan? Do you have personal loans? So they take a look at all those as well. So it's weird, but you have to have debt and pay it back in order to have a good credit score. Um, and that's kind of the universal way that they have of tracking to see what to gauge what your credit score will be. So credit building tips. Um, this is just my experience with members before. So consistently making payments, that's the number one thing. I've seen it where if you skip one payment, it knocked off 100 points for one of my members. So making sure you're making payments, even if it's just the minimum, but make it before, again, it's a 30-day late. So know your credit limits. Don't charge any more than 30% of that limit. Um, Avoid closing accounts, especially the oldest ones that you have. A lot of people have lower credit cards available balances, but those are the oldest one, and they end up closing it, which actually impacts them because now you've closed out the account that you've had for over 10 years, and now your newest account is probably like 2 to 3 years old. And so avoid closing accounts with higher credit limits and older ones. So I've seen this as well, improving your spouse's credit cards. So if you have a really good credit score and a good credit limit, you're paying your credit card on time, you can add your spouse to your credit card. They get your history and they get your credit card limit. So that significantly can improve your credit score. But remember, you got to talk to your spouse about that. Make sure they're okay with being added onto your credit card. And then last but not least, utilize our the free credit report monitoring. Credit Karma is a really good app that you can use. And just you get one free credit report a year. And so just make sure you get on there to dispute any errors, make sure there's no credit card fraud. I've seen it where, they've mistakenly reported a wrong credit card to someone else's name. And so it doesn't happen often, but I've seen it again. So just making sure that, again, everything in your credit is good. So requirements. So we're gonna jump into this. A lot of what my loan officers do is they look at what we call your debt to income ratio. That's really how they figure out how much of a house you can afford. That's probably the biggest thing is they look at your income. right? And they look at the amount of debt you have right now, and they figure out a percentage of your monthly income is how much they can actually use for a mortgage. So I know this is a lot of numbers, so I apologize, but I wanted to show an example, right? So we're assuming, so on the right-hand side here, you've got borrower one, he makes $10,000 a month. Um, Regular conventional mortgages allow us to use 45% of that for like monthly payments. So this is assuming he has zero debt, doesn't have any monthly payments. Um, so which means that 45% of his income, he can qualify for a mortgage payment of $4,500. So then what the loan officer does, or what we do, is we figure out, okay, what program is he, what program is he going to get into? How much is he putting down? All right, 550, 5% down, right? What's today's interest rate, right? Okay, so that's what the payment's going to look like. Then we estimate what your insurance payment's going to be, your property taxes will be, and your mortgage insurance is going to be. So then, for example, in this one, they can qualify for 550,000, but that's a $4,400 payment. So, um, and this is just kind of an example again, assuming someone doesn't have any debt and they make $10,000 a month. And so, um, but I just kind of wanted to give you an idea. So like if you had a car payment, for example, of $1,000, you'd have to take that away from the $4,500 that's available. So, um, and then I wanted to cover, so kind of when we were looking at requirements here, loan programs, it's different. So we were just looking at a conventional mortgage, which is kind of the most common type of mortgage out there. But we offer a variety. So FHA loans, how I was telling you that conventionals use 45% of your income. FHA is a government-backed loan, and they can use up to 55% of your income. And so again, different parameters, right? VA loans, those are veterans. So if you're a veteran or a spouse of a veteran, you can qualify for 100% financing, which means you don't have to put any money down. And VA loans allow you to go up to 50% of your income. And so, um, again, I don't expect all of you to memorize everything. This is kind of what we do. And so we look at these items daily. And so, um, number four, those adjustable rate mortgages. Again, one of those big things where you have a low misconception is that they're going to adjust every year. They don't. They have structures to them. And I wanted to give an example. We're going to look at this 10/5 arm. That means your rate's locked for 10 years. And then every 5 year, it can go up or down according to the market. And keep in mind, the adjustable rate mortgages are 30-year terms. So it can only adjust, 11, 16, about 4 times if you're looking at a 10/5 arm. But again, average lifespan of a mortgage is only 7 to 10 years. So, um, we've got our zero down program. So allows you to put no money down, cover your own closing costs, of course, but payment's going to be a little bit higher. So it's an equity builder because the term is only 25 years. And then just other programs that we've got out there, Community Heroes for our nurses, our firefighters, police officers, allows them, it's a list of professionals, Community Heroes that we have that allows you to put a minimum of 1% down. And so, um, again, we've got a ton of options here. And we offer out-of-state financing too. So if you're buying in like Arizona or Florida, we can help you with that as well. So um, move on here. And like I said, if you wanted more information about our programs, I'm more than happy to chat with you. This is new for us. So we recently partnered up with Minnesota Housing Finance Agency, which is acronym MHFA, August of last year. And this program is a down payment assistance program that offers our borrowers up to $18,000 for their down payment or their closing costs. So we were super excited to be on their list of approved partnerships. And so this program is, it's income limit based. So there's limitations as to how much you can make a year, but it does differ based upon how many people are going to be on the loan and how many people are going to be living at the property. So again, so there's a monthly payment loan up to $18,000. You just make a minimum payment each month. So it's like having two different types of loans. You got your primary and then you've got the second one that you make payments to. The second one, which is the more popular one, is a deferred payment loan, which is if you live in the house for 10 years. Oh, sorry. This one is you don't pay it until the very end of the, the term. So after 30 years, that's when the $18,000 will come due. So, and this one doesn't have a minimum payment. This one is a 0% interest rate. And so, but again, super exciting stuff. Minnesota housing. Again, I'm happy to discuss in more detail with you. Again, just like any first-time homebuyer programs, there's income limits on those. And so again, there's a ton of programs out there. We have community programs as well based on the city you're buying in. So getting pre-approved. So at this point, we've already talked challenges, we've already talked opportunities, we've already sat with you, kind of figured out what you want to do. If you're like, I'm ready, I want to buy in the next 3 months, we complete an application for you. Very simple. Collect your information, which is name, social security, email, all that good stuff. We'll gather income and assets, so like pay stubs and W-2s. We've got it very streamlined now where we don't even need those because we can verify a lot of that information electronically. And so we pull a soft credit pull. We turn the screen around and say, "Hey, Joe, this is what your credit scores came in at." This is just a soft pull because if we do a hard pull, what happens is you're going to get a ton of solicitors calling you. Um, because that they buy lists from the bureaus. So like they buy credit lists from the bureaus for people who do a hard credit pull on their mortgage. And so we just do a soft one to begin with. They're pretty accurate. And then what we do is we review your personalized application. So we take a look at, we say, hey, this is what the payments look like. This is what your interest rate is going to be. Estimated closing costs. Here's what you need for closing. How does all that sound, right? Because like I said, everyone's file is going to be just a little bit differently. And so the application itself is probably less than 30 minutes. But again, I think it's more important that we get to know you and figure out what your goals are. And so monthly payments and closing costs, I always just like to go over this to make sure you're comfortable with this. So these are kind of the components of what a payment looks like. So the first thing is you've got your principal and interest. That's how much money. So every time you make a payment, that's how much money is going to interest. That's how much money is going to your actual balance. Second thing is mortgage insurance. So if you're putting less than 20% down, mortgage insurance covers the lender. So us, in case you were to default, it just insures us. But that is a premium that you pay. Property taxes will vary. So if you find a house and it's got really cheap property taxes, kudos to you. I mean, your payments will be a little bit less. Property taxes in Minnesota are paid twice a year, May and October. And then what we do is we call it escrow, but your property taxes, your mortgage insurance, and your homeowner's insurance are all put into like one account that we create for you. And then when they come due, we just pay them accordingly, like when they're on their due date. So homeowner's insurance is something you'll shop for. And so again, you don't have to worry about any of this until you find a house, you've made an offer, and the offer has been accepted. And so, and I did put in here homeowners association. So if you're buying a condo or a townhouse, that's a separate cost that'll probably range anywhere between $200 to I think $400 is the max I've seen on an association. So, and that's if you're buying like a condo or a townhouse. So, closing costs. That's another thing that added fee. Let's just keep adding on, right? Buying a house isn't free, so unfortunately, there's cost to it. So there's loan charges, but really reviewing to make sure. So when you're meeting with your loan officer for the first time, and we usually go over these with you. Loan charges include like the origination fee, which is the amount that's going over to the lender. Appraisal fee. So we always, when you're buying a house, none of this is upfront, by the way. This is all part of the loan process. You don't pay any of this until you are pretty much on closing day. So, but there's a cost to do an appraisal. So we make sure the house is worth what you're paying for it. There's a cost to pull your credit. So the credit bureau charges us, we pass it on to you. I mean, unfortunately, we can't cover the credit report fees. And so, closing costs are typically between 2 to 3% of your loan amount. So other fees that are on there that really can't control title companies. Title companies play a really big role because they make sure that the transfer of the home is done correctly with the county from the seller to your name. So a title company, and they help with the closings. They have you sign the documents. They ensure everything is recorded properly. So a title company is really, really crucial to really putting the whole transaction together. Um, if you're buying in Minnesota, you can't avoid the government recording fees. And then last but not least, I know we had touched on this too, your house insurance and your property taxes. Um, since their taxes are due in May and October, it just depends on when you're buying and when you're closing. We set up an escrow account for you, which is a little bit added cost to it. But again, I didn't want to jump into it too much, but I just wanted to kind of share with you um, what that looks like in terms of the closing cost. So some mortgage myths I wanted to debunk. You need to put 20% down. That is not true. You can put as low as 3% down. You can put as low as 0% down, depending on the program. So um, I know a lot of people have been saving, which is awesome, and they're like, I'm saving for 20% down, and I don't want to pay the mortgage insurance. But what a lot of people don't understand is your mortgage insurance is really based upon your credit score. So if you got a really good credit score, so you got a credit score of 780, right? Your insurance, your mortgage insurance is going to be pretty minimal. Where I should say it's going to be like between 80, $180 a month if you put like 5% down. So again, lots of option there in terms of, and there's a couple ways you can structure that too, like where if you pay the mortgage insurance up front, you don't have to pay that at all. Or again, there's a lot of ways we can structure a loan for you. So second thing is you have to keep your mortgage for a number of years. That's not true. I've had people who just bought a house, I want to say May of last year. They financed it and then they came back and they're refinancing it. So you don't have to keep your mortgage for a number of years. Uh, so some people used to think that you had to hold on to it for like 5 or 6 years before you could do anything with it, and that's not true. So buying is always a better financial deal than renting. Again, I think everyone's got their own timeline. I loved renting. Again, I loved being hands-free and not having to worry about anything. But maybe renting is good for you. But again, I think it's important to get in and kind of educate yourself. Like if you buy now, and what's your payment going to be? Is that going to be okay with you? And if it's going to be too high, then continue renting and just put money aside and start and keep saving. And so another one is the last one. You don't need an agent to buy a home. So I am going to be the first to say this. You need an agent. So no, but an agent is going to be your best friend, right? They're going to be the one that's going to be going out there with you. They're going to be the one that's going to be taking you to see these houses, making sure that you're seeing everything. Because, in my personal experience, and I'll just say Rachel was my realtor, but we went to see a house. It was beautiful. They had gutted it, remodeled it, and it was just fantastic. All right. And my wife and I we were just ecstatic. We're like, this is it. This is the house. We love everything about it. But what ended up happening was Rachel's like, if you look at it, they did a good job remodeling it, but the floor is crooked. Like it's leaning. And I'm like, no, it's not. And so when we roll the pencil or a little ball, I think, and I'm like, yeah, never mind. It is. It is slanted. And I don't know if Rachel remembers this, but I'm like, man, we were just so in love with how, aesthetic the whole house was. But then I'm like, and then we went outside, and she's like, yeah, roof is old, so I think having a realtor to fight and be on your side is just so crucial right now, and being able to negotiate on your behalf. So um, sometimes some people can do it on their own. Some people can do for sale by owners. Some people are buying from family members. Totally okay. But like I said, if you're out there, definitely have a realtor to represent you. So some quick home buying tips, what to do, what not to do. I'm getting close to the end here, so thank you everyone for your patience. If you're pre-approved, don't go apply for new credit, please. What happens is when you get pre-approved, we do monitor your credit, because if you apply for new credit, you're going to have a new monthly payment, which means you might qualify for less house. So if you're pre-approved, don't go applying for new credit. Continue making your payments on time. I've unfortunately have instances where I got someone pre-approved. They stopped making their payment. They didn't find a house for 3, 4 months. I went back and looked at their credit score, and unfortunately, they missed a couple payments and were no longer qualified. And so, um, moving money around. So if you've got money in your savings account, and thinking that it's going to be easier to just move it all into one account to pay for the house, I would hold off on it um, until the very end of the loan, because if you move things around, we're going to probably request documents for it, which means that you're going to have to do more work, which means going to the bank, getting a transaction history, making sure it's stamped, signed, and all that good stuff. So trying to create less work for you. We're trying to make it as seamless as possible. And so, and last but not least, try not to quit or change your job. So changing your job is okay, especially if you're getting a promotion, but just know that when you do a job change, we need normally at least one pay stub and then an offer letter. But if you quit your job, that's a different story. Like if you quit and you're not working anymore, unfortunately, that pre-approval letter is no longer valid. And so I've had that happen too. It's unfortunate, and well, fortunately, we had to do was delay the closing, and the seller was okay with that. And so, but those are some of the things of what to do and what not to do. And so once you're pre-approved, now what, right? You're like, okay, and I just went through this whole thing with my lender. I've got a million questions answered. I've got so much information. Now what, right? So we've given you a letter now. We're like, hey, you are pre-approved for $300,000. Go nuts. No, I'm kidding. But no, like we're like, hey, this is what you're approved for, and this is who you should. And if you don't have a realtor set up yet, normally the loan officer will recommend someone to you, or vice versa. Um, but what I would, again, your next step would be contacting the real estate agent, because they can set you up with what we call an MLS site, which Rachel will probably cover, so that we can narrow down your home ownership needs. Which means, do you want an attached garage? How many bedrooms? How many bathrooms do you need? Is it a split level home, or is it a townhome? So, because that, again, your real estate agent is going to be your best friend when you're searching. And so from there on out, like I said, you can start your journey and really find your dream home. And so, again, the pre-approval process probably takes a day before we can get you the letter. Finding a house is probably the longest period. So, I mean, I've seen people take anywhere from a month up to, again, 5 years. And so once you find a house, you'll make an offer on it. The offer will be accepted. And then from the offer being accepted to closing, it's about 30 days. And so, but I'll let Rachel cover that part of it, because again, she's going to be the expert, and she's going to be the one with the knowledge on that. So, um, any questions for me at this time before I turn it over to Rachel? Awesome. With that, here, Rachel, I'm going to stop sharing, and I will let you take over.
All right, 1 second here. Let me get this up. All right. Hey, everybody. Hope you're having a good evening. Thanks for spending some time with us tonight. You got it okay on your end? Can you see it?
Looks great.
Perfect. Okay. So my name is Rachel Scala. I am a realtor with Edina Realty. I've been licensed, a little bit about me. I've been licensed for just about 18 years, coming up on 18 years. I've been with Edina Realty for 17 of the 18 years. I'm licensed in both Minnesota and Wisconsin. There are some very big differences between the two states. So for the purpose of tonight, I'm going to mainly talk about the Minnesota, pardon me, side of purchasing. Again, the process in itself is pretty similar. There's just some differences in the contracts and stuff. If you have any questions about Wisconsin later on, please feel free to reach out to me and I can answer those individually. I live in Arden Hills. I've lived in St. Paul, Blaine, Hugo. I cover a wide swath of territory across the Twin Cities and Western Wisconsin. And again, I've been doing this for quite some time, so I have experience kind of all over the place. Okay, so before we dive into kind of the home buying process and on my end how that looks, I wanted to give you a quick market update. So I hope you can see this okay, but I'll kind of talk through the numbers. This is our Twin Cities, 13 county metro area statistics that come out on a month-to-month basis. So these numbers came out the end of December, and they are looking at November. So November is kind of a bad month to use. So I'm going to give you some additional info that's not on this slide. Typically in November, we start to slow down a little bit for the winter fall season, and then it picks up again typically right after the Super Bowl. That's kind of like our date. It's like the Super Bowl ends and boom, spring market kicks in. But for the purpose of looking at comparison from last year to this year, we can look at this slide. In November, there wasn't much of a change in inventory from year to year. Now, when I did a presentation a couple months ago and I was looking at, September to September, we had about a 5% increase in inventory from September of 23 to September of 24. So we did see an update in the amount of listings that we saw on the market. Now, not on this slide, which I have up on my computer right now, which you can't see, new listings for the entire year of 2024 compared to 2023 were up 8.5%. So as a buyer, when you hear that, that's great news because there's just so much more inventory for you to look at. There's going to be less competition. There's going to be more decision time. I don't know if any of you watched the market back in 2021, even start of 2022, but it was crazy. I mean, things were selling so fast. You barely had an hour to decide when you were in that house if you were going to make an offer. And since then, we've chilled out a bit. Part of that has to do with the rise in interest rates, and part of it has to do with the fact that now we have a little bit more inventory on the market. But again, looking back at this slide, what we see here is that November was very similar to the year before. There is an increase in median sales price. And again, year to date, if we look at 24 compared to 23, not on the slide, I apologize, but if you want to jot it down, the median sales price is up 3%. So in 2023, the median sales price of a home was $370,000. In 2024, the median sales price was $381,000. Now, another stat that's kind of important to think of is what's the percent of the original list price that was received for an offer? So if a place was listed at 400, what did they get? And last year across the board, 98.8% of the list price was received for most offers. So if we're looking at averages, that's close to 100%, obviously not quite 100%, but the year before it was 99.6%. So what this means for you as a buyer is that we have more opportunities out there. We have more inventory to choose from. You have more decision time. Now, this is pending sales activity, and this one does show you kind of month to month of what we're looking at for the past couple of years. So as you can see here, we have more pending sales in 2024, and this is just November, but again, it shows you the months, but we have more in November of 2024 than we did in 23, and then we did in 22. So we're seeing that the pending sales are going up, and I think this has to do with the fact that our inventory levels are going up. So there's more opportunities out there to buy. Now, I do speak rather quickly, so if you have any questions, please feel free to type them in, and that will slow me down a bit. So absorption rate, what are we talking about with absorption rate? Absorption rate is basically the month's supply of inventory. So when we talk about this, basically what we mean is how many months would it take to sell everything that's on the market? Now, this is an important fact or key, I should say, because it indicates what type of market we're in. In a level playing field, an even market, you have between a 4 to 6 month supply of inventory. So it would take between 4 and 6 months to sell everything that was on the market with the current conditions, with buyers out there and everything. Now, back in 2021, we had a 0.8 month supply of inventory. And so as you can see, we are gradually getting larger with our absorption rate. Now, again, this one here kind of talks about November, but from a slide that I had previously, our absorption rate was 2.6% for the year. So we're slowly going up. Now, obviously, we are not at a balanced market yet, meaning that it's not a level playing field for buyers and sellers. I would say the sellers in some cases still do have the upper hand just because we still don't have that level 5-month supply of inventory, but we are slowly seeing that level rise and that absorption rate get higher, which is great for you as a buyer right now. Okay, so that's kind of what we see in the market right now. Here's what I'm seeing personally. So I think that we're coming out of, obviously, our holiday lull. Things are starting to pick up. We will start to see a lot more inventory hit the market in February. I've got a ton of people that are talking about, okay, what do we need to do to get our house on the market? There's a lot of chatter around that. So everybody's doing kind of their prep work right now on their homes, and we should start to see an influx of inventory starting in mid-February. And our spring market, it sounds funny because it's the dead of winter, but spring market is February through probably the beginning of May. Most of the homes are listed in that 3-month time frame. After we hit May, we start to see the summer slow. And our area is very driven by the school schedule and school district. So what you'll see is that A lot of people want to get their house on the market, get it ready, and then close in the summer. That's why we don't see a lot of homes sell in August, because people want to be in their house and ready for the school season to start. So if you're ready to go, now is a great time to hop in before everybody else does. And there's still good opportunities to have out there. I've had plenty of people get closing cost coverage this winter. Not as many multiple offers. There still are multiple offers happening, and that just is the nature of the business with us not having, a 7-month supply of inventory, but they're not going as crazy as they were a few years ago. So at one point in time, it wasn't unreasonable to see a home go 20 to 25% over list price. And now when we see multiples, we maybe see things go, you know, 5 to 10,000 over list price, depending on the price point. So just keep that in mind when you're searching. Your realtor will let you know exactly what's happening at that point in time when you're searching. The market does change so fast. So it's important to have somebody, and we'll talk about this as we move through of what the role of realtor is, but it's important to have somebody that's doing this day in and day out, because they can tell you exactly what they're seeing in that moment. Actually, we'll just get to that in a second. Okay, so what's the role of a realtor? I would break my role down into 2 main parts: education and representation. The education part can start well before a client is ready to buy a house. So oftentimes I will sit down with people, we'll meet at a coffee shop, we'll meet in my office, and we'll talk through the process, and we'll talk about basically what we're talking about right now, what to expect, what's your timeline, when should we start the search, when should we get you set up on a home search, and talk about, expectations of what's happening in the market and steps to take to be ready to go. So the education part of a realtor can start well before you're actually like boots on the ground searching for homes. It also comes in the form of market knowledge, letting you know what they're seeing day in and day out. And as we walk through homes, it's our job to point out things that we see, that we notice, walk through when you're doing your inspection and talk through the inspection report with you. So we're a book of knowledge for you as a resource for anything that you need, and that's your realtor's job. We have your best interest at heart. We are working solely for you. So having somebody that's there, that's, a professional to do that for you, to me is pivotal when you're buying a home. Market knowledge, we've talked about this. This is extremely important that your realtor has the market knowledge. You don't necessarily want to be working with somebody. I mean, there's thousands of realtors out there, and everybody knows a cousin, a friend, a girlfriend's brother that's a realtor. With that being said, you want to make sure, and we'll talk about this in a second, that they are doing this full time, because the market changes quickly. The other part of my job that I would say is very important is obviously the representation. So I have my client's best interest at heart. I'm looking out for them. This isn't a paycheck for me. This is their livelihood, being able to help them buy a home that they're going to live in and enjoy. So I take it very seriously, and I want what's best for my clients, as every realtor should. So those are the 2 main points that I think. Obviously, we're going to negotiate on your behalf. We're going to try and get you the best deal. We're going to make sure you're buying a safe structure. We will guide you through the process from start to finish and thereafter. I like to think that when I have a client, it's my client for life, and that as long as I'm in business, I'm here to help them. So I get called, texts, emails all the time asking for, resources and stuff like that, contractors, hey, what's this? What should I do about this? And that is totally fine. That's my job. That's what your realtor's here for. Anything that has to do with the home, we're your people. We can give you information, again, on professionals, community information, and networking. Networking's huge, because sometimes there's opportunities that aren't listed on MLS. At Edina Realty, we have a site called Network One. So it's off-market properties that our sellers have allowed us to advertise, and we can kind of match it up with our buyer needs. And in the past few years, it's been very beneficial for clients not having to get into bidding wars by seeing these properties off market and being able to buy and secure them before everybody else sees them. So it's not just anything. A lot of people network through all the companies, but networking is huge. So we have a ton of resources with networking to find you the best homes out there. And again, our job is to work just for you. Okay, home buying myths. Here's the 2 most common home buying myths. Number 1, you should use multiple agents, because if you do have multiple agents, you'll have access to more inventory, or you will be able to find a home more quickly. Not true. So once a property is listed on MLS, it goes out there to the public and every real estate site. So I, as an Edina Realty agent, can show Keller Williams or Remax or Coldwell Banker. We have access to everything that's on the market. So having more than one agent isn't going to find you a property more quickly. And another common misconception is that if you don't have an agent, that you will save money by just going to the listing agent. And that isn't true as well, for the simple fact that when a seller lists their property, they're entering into a binding contract, and the commission is already designated in that contract. And so if you are unrepresented, it just means that that listing agent is going to retain that full commission, and they are the only person that contractually cannot represent you in the sale. And they represent the sellers under contract and aren't able to give you their full fiduciary duties, which means you're potentially might have somebody not negotiating on your behalf, not looking out for you, not, helping you through the inspection process. Now, there are it's not in essence free to use a realtor simply because every company has what's called a broker admin fee. It's part of your closing costs. It can range anywhere from $300 to $600. The realtor doesn't see a penny of that money. It goes to the brokerage that writes and retains the offer. But I just want to be fully transparent that that's the one fee that you would see that would be a real estate fee. Now, if you went to the listing agent, there would still be a broker admin fee on that transaction. Okay, so here's the home buying process at a glance, and we'll kind of talk through all these steps. All right, step one, it could be step two, choose a realtor. So get a referral, ask your family, ask your friends, ask the credit union if they have resources for people that would be looking in your area, and interview them. This is going to be the most expensive purchase that you've probably had in your life. And so you want to make sure that you're working with the right person. Some questions to ask. First of all, are you a full-time realtor? That is going to be the most crucial question to figure out. You want to make sure you're working with a full-time realtor, again, for the market knowledge. Secondly, because you want to make sure that they're going to be available for your schedule. If you have a 9 to 5 job, you want to make sure that they're going to be available in the evenings and weekends to show you properties. What's their communication style? Do they answer their phone when you call? Will they text you back? You want to make sure all these questions are answered so that you have an enjoyable process. I think it's also important to understand, where do they work? Where are they comfortable? We all don't just work in one city. So let's be clear on that. We usually cover a wide swath of territory. But if you are searching for a home in, let's say, Hastings, and the realtors from East Bethel, that might be kind of a long distance to travel. And are they going to be familiar and comfortable showing you homes in that area and be able to give you the best advice? So make sure that they at least are comfortable working in the areas that you're looking in. You could ask them, how long have they been in the business? How many homes have they sold? Not super important. Obviously, people have to start somewhere, but the more experience, the better. Another question that would be beneficial to ask is, are they on a team? Are they not on a team? And what does that structure look like for you? There's not a right or wrong answer, but there are some teams that, once you hire them to do the job, you get shuffled off with different people, and that's fine. But if I were searching for a home, I would want to know who's my point of contact, who's going to be showing homes, stuff like that. So these are all questions that you should ask up front when you interview the realtor, and then make sure you click. You are going to be spending a significant amount of time with this person. Like Hal said, you could be searching for a house for a month, or you could be searching for a house for years. I have seen people go out on the first weekend and find a house, and that's not unusual as well. But you will be spending a lot of time with this person. You want to make sure that it's enjoyable and that you trust them. Like I said, it's a very big purchase that you're going to make, and you want to make sure that you trust them with all of your information and, doing what's best for you. And then once you have interviewed, commit to that one agent. Now, we have some changes that went into effect last fall. There was a large national lawsuit that included the National Association of Realtors, which includes most realtors. And the big change that came out of that is that now we have to have a written agreement before we open a door for somebody. So in the past, we could get a sign call and we could go show that property to whoever called us and not sign anything. And now you must have something signed in order to get into a house. So that could come in the form of just a one-time showing, like, I'm going to open this door for you. I'm not going to give you any advice. I'm not going to, offer you any of my fiduciary duties, but I will show you this property. So that's option number one. Option number two is the standard buyer rep agreement. Now, everybody used to do and use this form differently. A lot of people now, if this is your first time going out, they'll have you do the one time just to make sure you click. And then after that, you'd move forward signing a buyer rep. Now, one important thing to note is if you are starting to search and you really haven't honed in on a realtor yet, or you haven't been connected with somebody, be very careful about what you sign. If you click on Zillow, show me this home, or if you have somebody open up a door for you, you want to make sure that you're not putting yourself into a contract that would bind you to that realtor for 6 months or something like that. Or you want to talk through the compensation part of that contract, because there is a compensation part, and you'd want them to fully explain to you what their compensation policy is. The way that it works is, like I mentioned before, when a seller lists their home, they're entering into a binding contract with a certain commission amount, and part of that is designated to the buy side. Now, There are some sellers who say, I'm not going to pay the buy side. And in those buyer rep agreements, it might say then that you as a buyer are responsible for paying your agent up to X amount. So just be very careful about what you're signing, read through it. Better yet, don't click on Zillow, show me this home. Get connected with a realtor before you start searching so that you know that you're protected and that someone's looking out for you. Okay, so again, step one could be step two. Step two is get pre-approved. Like I said, these are interchangeable, but you're going to want to do them pretty simultaneously. You're not going to want to search for properties until you are pre-approved for a couple of reasons. Number one, a lot of sellers don't want people coming through their house unless they're pre-approved, ready to go. Number two, let's say you go out and you find the perfect home and you aren't pre-approved. You might not have a day or two to get that pre-approval if there's a multiple offer situation. And the third reason is we want to make sure that we're showing you properties that you're comfortable buying, that that monthly payment will be okay with you. We don't want to go show you a house and then have the numbers run and find out that that's way more than you want to spend on a monthly basis. And now you're going to compare everything to that home that we saw. So getting pre-approved is very, very important. Kyle talked all about this, so I'm not really going to say much more. All right, so you've met your realtor, you're pre-approved, you're ready to go. Now it's time to kind of refine your focus and sit down with your realtor or talk through on the phone what you want your search to look like. So I would say make a list. What are your absolute must-haves? Is it school district? Is it style of home, proximity to work? So what we want to start in on what's the must-haves, deal breaker things. From there, we're going to start talking about here's what we really would love, our needs versus our wants. And again, some of these are going to be restricted on the type of financing that you do. If it's an FHA or VA loan, we might not be looking at a fixer-upper property. So these are all things that we'll talk through. Then we'll start you on the online home search. Now, a realtor has to set you up on it. It's called the One Home Portal through MLS. This is like your go-to list of homes. I say it's never too early to have your realtor set you up on this, even if you're looking to purchase a home in 2026. Why not get set up so that you can be monitoring the housing inventory and what that looks like within your parameters? So typically we keep it very general. We're going to set it up based on, your geographic location of where you want to be, your bed bath criteria, the price point, and any other absolute must-haves. This will populate a list for you of everything that's available from every company, and it will push notify you if you choose to have it that way. The good thing about this search is if a property goes pending, it's noted right away. When it closes, it shows you the closed sales price. So you can kind of be looking at all the inventory and all the information and data that your realtor has. So again, if you're looking to buy even in 9 to 12 months, get set up on this search. Be passively watching the market so you can be up to date on what's happening as well. Now, like I said, the portal North Star Search is going to be the best site out there. Obviously, there are a ton of consumer-friendly sites to search on. I would take with a grain of salt on what they say is available and what's not, and the accuracy of that inventory. So Zillow is so easy to use. Everybody loves it, but it is our worst nightmare as a realtor. It's my worst nightmare. Not accurate, not updated. There are so many times that people will send me a listing and say, hey, I saw this on Zillow, but it's not on my search. Why can't I see it? I will pull it up on my end, and guess what? That house sold 4 months ago. That's why it's not on your search. So just be aware of what you're searching for. And again, like I mentioned, unless you're just like super casual and you don't want to get hooked up with a realtor, don't click on show me this home. It's just going to send you to a random person that's buying leads. And then again, you might have to sign something that you're bound to. But again, online home search, that's going to be the next step after we've talked about your needs and wants and after you're pre-approved and you've been hooked up with a realtor. This is kind of just a screenshot of what it looks like on MLS. It looks a little different now with the One Home Portal. I should update this slide, but it kind of just shows you like the MLS number, the property address, and then the specifics like bed, bath, square footage, all of that. Okay, so you're set up on home search. You are ready to go. Then it's time to start viewing properties. So the most common way that we will do this is we'll go on a private showing. So clients will be like, hey, I found these 5 homes on this search. I want to set them up to see them. We'll coordinate around schedules. And I, as a realtor, or your realtor, would set up those showings for you. The seller leaves at that time. We enter the house through a lockbox. There may or may not be other showings happening at the same time if it's a hot property, but that's the time that your realtor will walk through the home with you. Open houses are a very casual way to view properties. You can go into an open house and not sign a contract, so that law never changed. So again, if someone is at an open house and they try to make you sign something, you do not have to sign it. But open houses are just a very casual way to view a property. If you are working with a realtor, I would just let that agent that's in the open house know right when you get there, hey, here's my realtor's contact information. It's going to be helpful because let's say there's a deadline or multiple offers, then they can reach out to your realtor and let them know. And they won't hassle you too if they know you have a realtor to sign stuff and do all that. Second showings are kind of exactly as they sound. We now have a little more time to do a second showing. So let's say we went out and saw a couple houses one day, a couple houses the next, and you've whittled it down to your top two. We'll go back for a second time and check them out. All right, so we've viewed homes, you found the one you want, and then it's time to make an offer. So it's very situationally dependent on what is happening with that property. If the home was just listed and there's a ton of traffic going through, you might have to be in a situation where it is a multiple offer situation. If not, then a good thing to do would be like, let's sit down and review what the comps are. What have comparable homes sold for that are like this home? And that's going to help us generate an offer. Now, with that being said, if it's a multiple offer situation, those comps might not be indicative of what this home is going to sell for if it goes for over list price. But again, every situation is different. And so you'll know as you're going through with your realtor, is this a brand new listing? How long has it been on the market? How much traffic is there? So you can kind of have an idea of what you may have to do to secure the property. And every realtor has different strategies that are going to be helpful if you are in a multiple offer situation. So with multiple offers, basically it is what it sounds like. There are more than one, there's more than one group of people making an offer on the home at the same time. With this situation, the listing company will let us know, hey, look, we have multiple offers. There's going to be a deadline of Sunday at noon. And at that point, we submit what's called our highest and best offer. So it's not just purchase price that plays a role in what makes an offer the highest offer, but it is a factor for sure. So you'll want to decide, what are you comfortable spending? I would say 99.9% of the time when we have a multiple offer situation, the home is going to go above list price. So that's also something to consider when you're starting your home search. If your comfort level is 350, you might want to start your search or be cognizant of the homes listed at 350 if they're new listings, because they might go above that. So if you're like, I don't want to go over 350, then maybe we look at 325, or maybe you look at something that's a little bit lower to give you that buffer just in case you find the perfect home and you do have a multiple offer situation. But again, these are all things that you can discuss with your realtor when that time comes. Just be aware of it. Now, with highest and best, we don't know what the other offers are. It's basically like a blind bid. They're not allowed to say, hey, look, I have a 350. Will you do 352? Will you do three? It doesn't go like that. We give them what's your highest and best. In that situation, I always tell my clients, I would make the best offer that you can, where if you get it, you don't have buyer's remorse. And if you don't get it, you don't feel bad that you didn't go a little bit higher. And again, it's so tricky, I know, but it's something that's been going on for a while, so it's something to be aware of. And again, it's not just the purchase price that strengthens an offer. A shorter inspection contingency, a higher earnest money amount, being flexible on your closing date. All of these things can drive an offer to be stronger than somebody else. So it's a strategy that you'll talk through with your agent if you are in a multiple offer situation. Now, if you're not in a multiple offer situation, we just love that because then we can kind of negotiate depending on how long a property's been on the market. I would say kind of anything over 2 weeks is fair game. Even though things are sitting a little bit longer on the market, if a property hasn't gotten an offer in 2 weeks, then maybe the market and buyers are not accepting that price and we can do a little more negotiating. 30 to 40 days on the market with no price change and no offers, then we really are seeing that the market doesn't accept that price, and then we're going to pull comps and see where they're sitting. But we'll draft up an offer. In the offer, it will include the purchase price, your earnest money amount. Standard earnest money amount is about 1% of the purchase price. Obviously, if you're in multiple offers and you could do more, I would do more. Earnest money is given to the listing company within 48 hours of an accepted offer. Now, if you were to back out due to inspection, or if something happened with financing where your appraisal came in low and financing fell through, you would get your earnest money back. If you move forward with the purchase after inspection, earnest money just applies towards your down payment. But just know that you need to have your earnest money ready to go within 48 hours of an accepted offer. So if you have to move some money around and get it liquid, you'd want to do that, before making an offer to have that money available. So in the offer, again, purchase price, earnest money amount, we're going to designate the close date. So average close date, I would say, is 35 to 40 days. Now, if the seller needs a more lengthy close date because they're, building new construction or they need a sooner close date, that's something that we can certainly negotiate back and forth on. But just know 35 to 45 days is kind of the average. We're going to designate any contingencies in that offer. So the most common contingency is going to be your home inspection contingency. And we'll talk about that in a moment. So we'll draft the offer, you'll review it with your realtor and sign it, and then your agent will supply that offer to the listing company. If there's multiple offers, we'll have a deadline of when that needs to be in by. If there's not multiple offers, we'll get that over to them as soon as we can, and negotiations can happen from there. So everything is negotiable in an offer down to the curtain rods. Actually, I've seen a house fall apart almost over curtain rods. So everything is negotiable. But be prepared if you're not in multiple offers that there could be some counters back and forth. Now, you do not have a fully accepted purchase agreement until you have signed copies back from the seller side. So a verbal means nothing in this business. So I don't even tell clients they have an offer accepted until we have those docs back. Once we have your signed purchase agreement back, then our inspection contingency period begins. Now, this is a very important period because it's your time to be able to do your due diligence on the house you're purchasing. Now, your realtor will likely have resources for you on getting an inspection set up and what type of testing to be doing. But your inspection contingency in Minnesota, the average is 7 days. Now, day 0 is the day that you get the signed offer back. Day 1 starts the next day. Everything has to be negotiated out by 11:59 p.m., the last day of your inspection contingency. This is super important because even if you found, let's say you found 5 things that you absolutely wanted the sellers to address, and you sent over an amendment, your realtor sent an amendment to the seller's side. If they don't sign it and send it back to you and no communication or cancellation has happened, at 11:59 p.m. or 12 a.m. on the next day, that house is yours contractually. So it's very important that you and your realtor are going to be discussing what's happening during this inspection period. And if there's any total deal breakers, it's good to have a plan in place. If we don't get a response by this time from the seller, then maybe we send our cancellation of purchase agreement. So a lot happens in this short window of time after an accepted offer. Most common is obviously going to be your general home inspection. Now that ranges anywhere from, depending on the size of the house, anywhere from $400 to $700. This is something that you would pay an inspector directly. If you are buying in more of a rural area, then there's a well water quality test. The seller typically pays for that, as well as a septic compliance that they provide you. Now, a couple common add-ons that we see, in the Twin Cities or in our area would be radon testing. So if the sellers haven't done radon testing and don't have radon results, it's something that you might want to add on. That is a 48-hour continuous test. So they drop the canister, it sits in the house for 48 hours, and then they pick it up. Again, this is just something, the timeline to keep in mind. If you have a short inspection period and you want radon testing, we have to get that lined up. And then another one that's not on this list that is extremely important, I think, is a sewer line scope or inspection. That's kind of like a silent, massive expense if there's something wrong. It's a couple $100 to have someone come scope it to make sure that the line is, and not, have roots going through it or it's cracked or broken. But that, especially if you're looking in an area that has a little bit older of the, clay lines or something, very important to have a sewer inspection. I would say even more important than radon because it could be way more expensive if it comes back with an issue. So we have your inspection contingency period after your accepted offer. If everything looks good or if you negotiate out anything, then after that, we kind of send the ball into the credit union's court and say, hey, you guys get going on their end. They will do a lot of behind the scenes work. They will have an appraiser go out and appraise the property. So in that situation, we are just making sure that the home appraises for the purchase price or above. If it does not, then we would potentially need to renegotiate that sales price with the sellers. So there's kind of 2 hurdles to jump basically from the time of accepted offer until we do our final walkthrough, and that again is your inspection and the appraisal. Once all of that is done, it's kind of a lull between the realtor and the buyer. So not much happening on the real estate side of things after we've passed this offer off to the credit union and title. Obviously, we are available for any questions that you have. But the next time you typically will see your realtor is when you do your final walkthrough. We do this the day before or the day of closing. We try to do it as close to closing as possible just so that, when they move out, we make sure that the home's in good condition, nothing was damaged. We will do a final walkthrough to make sure that the home is in the same condition as it was when we were there. It's a good time to visually see if they did any inspection items that we talked about. Obviously, we would get receipts and stuff like that, but just to see what happened. So we'll do the final walkthrough, and then we will go to closing. So a change post-COVID or during COVID was that now it's just you are the buyer, your realtor, and your closing representative or your title closer. In the past, it would be, you know, the sellers and the buyers and both agents and both closers, and it was a big full open house or a big house full of people. And now it's just a more small group. So buyers, realtor, closer. The closer will go through all the documents with you. You will have seen most, if not all, of these documents before closing. So it's not a time to sit there and read every document, but it's a time that they're going to answer any questions that you have. But again, you'll have seen most of these. You'll sign your documents. It takes, I would say, 30 to 45 minutes. At this time, you will have all of your money. So your cash to close will either be in the form of a cashier's check or will have been wired to the title company. You'll bring your ID and you sign your papers and you get your keys, and then the house is yours. That's it. Final step, moving in. So some miscellaneous things, upfront costs to be prepared for. So obviously your earnest money. So that has to be liquid, ready to go. We have to give that to the listing company within 48 hours of an accepted offer. The most common way that this is done is through via trust funds. So it's just like an ACH. Your realtor will send you a secure link. You'll put in your info and it just sends the money. If you're not comfortable doing it that way, we could do a check. That's a little more difficult because we have to, you know, usually deliver it. So it gets there within that 48 hours. Then again, your inspection, that number is a little light. I would say your inspection is going to run anywhere from $400 to $800 depending on what you add on. So be mindful of that if you're kind of looking at what do you need up front. And then the appraisal, I think, how does that go on the CD or does that come up front? But either way, you'll have to pay for the appraisal. And then home warranties, what are they? What do they cover? So home warranty, there's a lot of different plans out there. Sometimes if we are negotiating on a house and we notice that, let's say the furnace and the air conditioner are in perfect working order, but they might be old. This is a nice product to add on to give you peace of mind for the first year, and then you can extend it after that. So most of the home warranties are repair or replacement plans. So if, you know, your furnace goes out in the dead of winter, you call the warranty company, they send somebody out. You usually have like a $75 deductible and they take care of repairing it. But there are multiple different options out there, but it is a nice feature to have, especially as a first time home buyer, to have that warranty for a first year. So if something goes wrong, you kind of have that protection and you're covered. And that's all I have for you. So again, I talk super fast. So if you have any questions, feel free to ask in the chat or reach out at any point in time. So thanks for joining us tonight and thanks for listening.
Hey Rachel, hey, nice job. Can you guys see my screen okay? Okay, good deal. So I just wanted to say thank you again, everyone, for attending. Kind of going back to what you were saying before, Rachel, the appraisal is on the closing disclosure, so we don't have you pay that up front. And yeah, like I said, we're just super excited to be here, being able to help you guys out. That's really the ultimate goal, building relationships and even going forward. And kind of to second what Rachel was saying before, um, just about that home warranty, I think that's super crucial too. My own water heater went out, and so I tried to YouTube certify all of it, and I did everything I could, couldn't fix it. And so I had to pay about $2,000 for someone else to come in and get a brand new water heater in. And so I think if I'd gotten a home warranty, would have totally covered it for like what, 50, $60 a month. And so but definitely worthwhile. But like Rachel was saying, like we're here to build relationships. We're here for the long haul. And we want you guys to come back to us if you guys had questions, or like even if it's not related to like a mortgage or buying a property. Like it's just, hey, we hope that you continue to build that relationship with us. So with that, we are early. So I'll open it up for any questions. Again, the chat function is open along with the Q&A chat. So um, if you guys have any questions, please type that in there. Otherwise, Rachel and I will probably stay on for probably a few minutes, and then we'll let you guys have the rest of your evening off. So, but again, thank you so much for joining. And our information is right up here. We'll probably follow up with a survey. We would really appreciate your feedback, but that probably won't get done until tomorrow. But if you have any other questions or wanted to meet with one of us, um, again, to start your home buying journey, we're more than happy to help you out. So, um, awesome. Yeah, and thank you again, everyone. Okay. I'm not seeing any questions in the chat. So Rachel, thank you so much for your time. It was
Yeah.
good seeing you.
Yes, you do. Thanks, everybody.
Yeah.
Have a great
Yeah.
night.
Have a good night, everyone. Take care.